CTM, what's going on, everyone? Good morning, good afternoon, good evening. I hope you're all well and doing great. So excited for today's session. It's Taco Tuesday, Jay, for sure. No question about that. And more importantly, it is the day before tomorrow's CPI. Why that is important is because right now we are in a data-dependent market. Something over the past several weeks we have been positioning our view towards. Let's say press conference, Jerome Powell, he pivoted towards now being data-dependent as well. And it matters. What happens next matters with not only tomorrow's CPI print, what happens in the next month's jobs report, what happens later in the month in Jackson Hole, where the Fed has used previous Jackson Hole symposiums to go ahead and communicate what their policy will be. I'm not looking for tomorrow's print and then trading off of the news, and none of us are. Now we're using that to go ahead and continue to build our macro forecast, our base case of what we believe is next. And as we talked about in late June, as the macro could change rapidly, it works both ways. And the macro since late June has changed rapidly. And we've seen the markets rally, whether or not this is just nothing more than a bear market bounce this rip is about to be sold. Maybe even tomorrow. By the way, if you look at what happened last CPI print, the last time that the market took a big dump, that was coming off of this CPI print right over here, and markets off of that 9.1 really dumped quite hard. And then notice we're back where we were though. We're back. It's kind of interesting, don't you think? A lot of people look at this chart right over here, this representation of the market through price and price alone with two trend lines and an oscillator, and they think that, well, this means that after tomorrow's CPI, we're into resistance, that we're going to be beginning the next leg down. That's quite possible. We're going to be looking at price and price alone on some various different charts to see when the next big leg down might take place. But I would say this is a coin flip where price is right now into the resistance. Resistance is resistance until it's broken. Tomorrow is a high impact news event, and it could lead to a breakdown or a breakout. It could go either which way. Starting off here with Bitcoin, I said I wanted to look at some technical levels to watch when potentially this rally can be sold. Let's start with Bitcoin over here, and everyone is, of course, watching what initially looked like a bear flag, right? And at this point, technically, it's just not a bear flag because the flag itself is longer than the pole. But nevertheless, it's still a bearish pattern. It's a bearish channel. We've seen a series of higher highs, and at the same time, we're seeing higher lows. And is that cause for any type of celebration? No, it's not as if we have to try to predict what's going to happen. Obviously, neither us nor anyone else has any type of crystal ball. We did a very good job of talking about how in this period over here, we cannot look 30 days ahead, 90 days ahead. You know, that's about as far as we kind of try to form our opinions. Beyond that, it's impossible, and that remains the case. And probably through September's FOMC meeting, I expect by the end of September, we know a lot more than we do today. But right now, we are watching this red line over here, the bottom. This line of support is the only thing that you need to focus in on. Obviously, we are in ever since the peak over here, all-time high on Bitcoin in November, 69,000. Just a massive, massive downtrend. And this looks very bearish. A lot of people are saying, first of all, this is not a significant move. Right? To me, 38% off the low, that's a pretty significant move. I'm glad we got to participate not only in the downside, but also on the upside a little. Of course, there's been no comparison to what we've achieved and done on Ethereum compared to what's happening now on Bitcoin. Nevertheless, well positioned compared to the majority of market participants. And Bitcoin will do Bitcoin things once again. Let me just jump down a little bit, and we're looking at this massive downtrend. It looks like a bearish pattern potentially is developing, but we don't know. I think that this is the most important thing to focus in on, this green line down over here. Why trading above it, right? Technically, this bottom that is taking place and near-term bottom. I could call it a bottom in so much as that, right? Price is now 38% off that low. As long as price stays above it, technically it's sound. Breaking down below that, that's a big technical breakdown. A lot of cause for caution if that were to occur. Let's take a look at Ethereum over here. You could see from this, simple TA over here, a trend line break occurring this morning, breakdown coming in for a retest right now. And I want to open that up, right, with this over here this morning in the Ethereum discussion channel. Bender talking about and asking for a little bit of clarification. Look, he sold at 1,800. His buy position, that buy position began, right, July the 14th, you all remember, and he started a little short to add on it later when the signal comes. He was hoping for 2,100 or 2,200. All said, the past trade was awesome, and he alludes to the bots doing their thing. Now, here's what I want to get into. He said, if it flips back up, I will close the short with a little profit and wait on the next signal. Maybe re-enter, but have to look at how the CPI is digested. By the way, that right there is very important. He's not looking, and it's reaffirming what we all know here. You're not looking for what the print is and to react off of it. You're looking to know what the data print is and then how the market reacts off of it. It's way more important than just reacting and then becoming something that's going to get you whipped around. Now, tomorrow, Ethereum will be affected like everything else. Common sense that people would be de-risking before such an event, so he closed his trade, right? It makes a lot of sense. Yesterday on Monday, we saw a nice little bounce, Bitcoin, Ethereum in the markets, and all that faded. Was that positions being squared up as we looked at the equity markets into that resistance? Was that people squaring up positions into tomorrow's CPI? Most likely. Is it the start of something bigger? Is it the start of the next down move? Potentially, we have no idea. It could very well be. Is today's price action, you see an Ethereum up 5%, Bitcoin up 3%. Is that the start of the next sell the rip and a bigger move down? Quite potentially it could be, but there's no way that we can know that. And we need to wait for tomorrow. It's a big high impact news event. He's not sure if he handled it correctly. I was wondering if I could comment on that. And it's really interesting, as you're going to see, because Bender already then later in the day gives the correct answer. But let's talk about this. That entry that he came off of was on July the 14th, that buy position, right? And that continued, and we continued to hold that, right? A week later, right? We have an update a week later, up 32% on that position. And then yesterday, price was up 57%. There's no way I myself had been trading that discretionally. I would have exited that trade multiple times. There's no way holding a position up over 50% in profit in just about, July, 3 weeks, right? And that trade has built up a lot of room going into tomorrow's CPI, high impact news event. Here's the thing. If you're following a mechanical system, there's no way that you get to benefit from that mechanical system if you trade a discretionary Bender. I am able to say this now, right? And please listen up. This is the most important statement so far of the session. You may have heard it before. I'm gonna remind you again. If, for example, you exit today at 1,800, and then that winds up being the top tick, tomorrow's CPI comes in hot, and you see the Ethereum off 20% tomorrow. What you just did is ingrain in your mind that not following the system and using your own discretionary abilities is superior. In that one, and by the way the human mind is wired, you will remember that one instance. You will immediately forget over the past, was talking many months now since March, right? You'll forget over the last 4 or 5 months, almost 95% of the instances where CTM 2.0 acted superior. If you were trading this discretionary, a lot of people did also exit in this area around over here, only to find that by following CTM at 2.0 on Ethereum preferred settings, the trade was able to actually go further into profit and for much longer. We had that just a few days ago as well. We were an hour or two away from closing with an exit. It just didn't exit. And here we are now continuing to hold that trade. If you're trading discretionary, there's no way that you're holding on that open position, which is quite nicely into profit. If you are deciding that you want to go ahead and trade a mechanical system, you have to commit to it and you have to be disciplined. Otherwise, what's going to happen is you are going to make mistakes, and those mistakes over time are not going to be as beneficial as the mechanical system. And what you are doing is setting yourself back as far as time. Time is the most crucial element in all this. Once you have a working edge in place, once you have a strategy that is able to consistently profit from the markets, what you need is time to produce those results, right? If you have, let's say in 2017, if you have a 900% gain, right? And then the next year you have a 100% gain, you're looking at 1800% compared to that 100. The only way things continue to compound if you continue to execute. I think that if you decide at any point in time you want to trade or execute off a discretionary strategy, well, that's fantastic. That's something that we continue to work on to sharpen our skills. You should do that, but you should separate what you're doing mechanically and what you're doing discretionary, even if that includes a hybrid of the two, where you're using CTM 2.0 and then you are overriding with discretionary ideas. I think that needs to be executed in separate accounts. Do not confuse or intertwine the two. Consistency with the strategy is important. It's not something that he already doesn't know. He knows it. I just want to build off of it. So Bender, I affirm greatly, first of all, the reasons why you did this, right? This is coming off of JMA, right? Talking about and showing us in the post above with that beautiful TA, that trendline break that was coming in place. And Bender, it was done for the right reasons. And not only was it done for the right reasons, you also understand the importance of consistency with the strategy being crucial. But at the same time, you have to decide what you're doing, right? Yeah. You have to decide, are you going to stick to something that's mechanical, right? And by the way, if you're sticking to something that's mechanical, if you were trading all of 2022 since January 1st, our preferred settings on Ethereum, the long side and the short side, you're looking, as opposed to buy and hold, down 52%, up 131% with a 12% drawdown, and holding a position that's 48% in profit. If this closes with a 40% profit, you're looking at 180% return first 7 months of the year, 8 months, 7 months of the year. And this is getting you to where you want to be. What's your plan? How are you getting there? What are you doing? What's your 7-year plan? Starting with $10,000, adding $250 a month, 70% return. Now I'm using 70%. Not conservatively. I'm using 70% after taxes, if you're paying taxes, in the highest bracket, and using something like our past results on Ethereum. Now, past results are in no way, shape, or form indicative of future performance. Everyone knows that. We are giving goals that we want to work towards, that we want to achieve. Not everyone is starting with $10,000, right? There's no question about that. What happens if you're starting with $1,000? What's your plan? You got to make these regular deposits, and maybe it's not then a 7-year plan, but a 10-year plan, right? Add 2 more years, and then all of a sudden, boom, you're there. You got to be executing. I don't think that discretionary trading that people are going to be here. I do believe that trading mechanically with the work that we've produced here together, this is not only this is a possibility, and it's something that the vast majority, you have to realize, when it comes to the capital markets, you're talking about the brightest minds in the world. Do you think any of them are doing anything like this? We know great Stanley Druckenmiller, 30 years, 30% return. Do any of you believe that you have the capacity to do that now? I think if I were to take a poll, I think that it would be over 90% of CTM, silent majority, those that are putting in the work on the replay or live each and every day, know that they have that possibility. And that was not a possibility for anyone, right? Think about it. Be honest with yourself. And I want you there. I want you executing now. I do believe potentially some type of hybrid at one point in time of trading CTM 2.0 mechanically with discretionary, or us finding a way to make the two more of a marriage of a rule based could potentially be better. There's no question about that. And we will continue over the weeks, months, and years ahead to strive towards perfection. That's what we're trying to do. We are aiming for the highest peak that you could imagine, right? We're aiming to climb the highest peak you can imagine. For me, that was conquering the markets. That's why we're here together. That's what we're doing, how we're doing it together. And I just want to reaffirm today the importance of being out there and executing. For everyone, it's the only way that as time passes, you get to be where you want to be. All right, everyone. I'll see you all tomorrow. Have a beautiful day. I'll talk to you soon.